Careers are on the line.
Exactly. Well, as we were saying earlier today, so far no one's actually been injured during any of our recordings of our podcast. So yeah, for
so far.
Yeah,
so far.
Okay, at this point, I am going to need about 10 seconds of complete silence because we're going to start some pre-audio recording devices here. So stand by for that.
Thank you for joining us for the second podcast on International Business Radio. My name is Tom Rossland. I'm the Honorary Consul for the Kingdom of Sweden. I'm also a business attorney at Bodker, Ramsey, Andrews, Winograd, and Wildstein here in Atlanta. I've been there for 29 years, and I am here in the studio today with the Consul General of Mexico, Javier Díaz de León, and founder and CEO of Goza Tequila, Jacob Gluck, and chief economist and adjunct professor of global finance, trading at the New England College of Business and Finance, Dr. John Min. And I would just like to say that during our inaugural podcast, we had the Consul General of Canada, Nadia Theodore, with us, talking about the trade relationships between the U.S., specifically Georgia and Canada. So this is an ideal opportunity to get a view from the other side of the border and the perspectives. So maybe we could just start off. This is an open conversation, but maybe with Consul General Diaz, could you tell us a little bit about the nature of the trade relationship between Georgia and the U.S.?
Well, of course, first of all, the nature of the trade relationship between the United States and Mexico is one of the largest trade relationships in the world. As I'm sure probably you have seen some of the numbers before, but to put it in the larger perspective, Mexico is the third largest trade partner of the United States in the world. The total trade between the U.S. and Mexico is over $550 billion per year. And last year, 2017, it was around $557 billion. That's about $1.5 billion per day is being traded between Mexico and the United States. So we're talking about a significant relationship. And on the other side, we are the third largest trade partner of the United States, but at the same time, Mexico is the second buyer of U.S. goods from the United States. The number one trade partner for the United States is China, number two is Canada, but number three is Mexico. However, if we look in terms of countries that are buyers of U.S. products in the world, for example, the United States exports to Mexico are over $240 billion, while the U.S. exports to China are only $130 billion. So in that sense, and what we need to understand is very important to understand is that the nature of this trade relationship that we have built in the past over 20 years in North America is very different from the sort of trade relationship that exists with other parts of the world. Because what is usually happening between us, by us I mean Canada, United States, and Mexico, is that we are usually trading with each other manufacturing goods. We are not usually trading with each other finished goods. And that is a key element to understand about the nature of our trade relationship. For example, every single product that Mexico exports to the world, 40% of that product is American content. 40% of that product is American content. In the case of Canada, it would be 25%. But if you compare that to, for example, Chinese products that are exported to the rest of the world, American content is somewhere between 2 or 3%. That makes a total difference, because what we are really trading with each other are manufacturing goods towards the creation that we have built, parts that we have created, a manufacturing power in the world that is probably one of the most efficient, if not the most efficient manufacturing region in the world. We don't talk about it a lot, but that's what we have. You asked about Georgia. And I've been answering a little bit about, the larger trade relationship. But in the case of Georgia, with this relationship that I just described for the United States, of course, it reflects itself on the Georgia relationship too. So in the case of the Georgia and Mexico, trade is over $9 billion. Mexico is also the second buyer of Georgia goods in the world. And what Georgia and Mexico are trading with each other, of course, yes, we buy peaches and you buy tequila and avocados. Yes, true. Yeah, we do that, and we love that. We have no problem with that. However, the real story of our trade relationship is not usually about avocados and peaches. It's usually about parts, about electronics, about machinery, about car parts and and the way we have a supply chain that is being established between companies that operate here in Georgia and companies that operate in Mexico, and American companies operating in Mexico and Mexican companies operating in the United States connected to this supply chain.
It's impressive. And I think you mentioned you had a passing reference to tequila as part of the trade
of course.
relationship.
Good segue.
And a good segue here, Jacob, with Goza Tequila. Tell us a little bit about your experience with trading with Mexico and
Sure.
the currency issues that come up with that.
Sure, absolutely. So I'm Jacob. I'm the founder and CEO of Goza Tequila. We are headquartered here in Atlanta, and people often say, they make tequila in Atlanta? No, we don't make tequila in Atlanta. Exactly. It's against the law to do so. So we have a long history with trading with Mexico, a good history. We have amazing partners in Jalisco in Mexico. So maybe not everyone knows, but tequila has to come from a certain region of Mexico to be called tequila, mostly in Jalisco, though not all in Jalisco. I believe the tequila business at large is about $3 billion. It's grown about 7 or 8% every year for the last, year over year for the last 10 or 15 years. We really obviously value our relationship with Mexico. It's very, very important. We've had a great experience. But, the lifeblood of our company really is, it's really an operational story as much as anything else. People think a lot about the branding aspects of tequila, and but at the end of the day, it's not, if it's not on the shelf, you can't get it off the shelf. People say you need a rapper or some superstar to sell your stuff, but the truth is you really need a good supply chain, good logistics brokers, people who understand the relationship between the two countries can actually fill the bottles and make the bottles, which is made in Mexico as well, and get it across the border. So our relationship with Mexico has been great, but obviously, it's pretty much the lifeblood of our business.
And John, I'm just wondering from your perspective, when you're talking about the currency issues that come up with importing business like Jacobs, what would you say are the relevant factors to consider?
Well, one of the things we have to recognize is that the market has been extremely volatile. In many respects, I have a small confession to make in a broadcast. I've been working with the same economic models for the past 20 years to some extent. I've been following the currency markets. All that reliable relationship has broken down around 2015 and 16. So if you look at, we're talking about Mexico, if you look at dollar and Mexico relationship, all I had to do was track the oil price to a certain extent and commodity prices, and it was pretty good, reliable indicator. That relationship just exploded 2016. That we worked with at Tempus, they thought the Mexican peso would get stronger. Well, Mexican peso had one of the worst years against the dollar. It was minus 22%. And I know you were talking about machine tool companies, that we work with a lot of companies in Michigan and Ohio, and they got this very sophisticated supply chain management. They build stuff in Mexico, bring it to the United States, they put it together and send it back to Mexico. And you're absolutely right to some extent. It's a block, it's a manufacturing block system to make it efficiency. What they're operating with the margins of 10 to 12% on average. And if the currency is fluctuating 22%, we're talking with a lot of CFOs and CEOs and controllers. They just don't know what to do. And in fact, 2017, one of the worst currencies in the market relative to dollar was a peso a year before. It was one of the best performing currencies. So a lot of our clients and businesses got a whiplash. And going into 2018, if you ask me where do you think the Mexican peso will go to run your business, I really don't know, because our models are based on economic fundamentals, like growth and inflation, the productivity rates and things like that. But now it's all political noise. And I know we're going to talk about, to some extent, NAFTA and the presidential election coming up. But right now, the market is so sensitive. So we're seeing extreme volatility in the market. So just sitting around for 30 days with an invoice from Mexico, the price of that invoice could fluctuate anywhere from 3 to 4% during the course of the month. And if your operating profit margin is 10%, which is the industry average for most of the machine shops and machine tool companies, we're looking at 50% of your profit, expected profit, is at a risk in every 30 days in the foreign exchange market.
And that hurts both countries.
Right. It depends on which side of the market, right? Because we know a lot of clients.
It can hurt both countries.
Yeah, we know a lot of clients, they executed their business plan perfectly in 2017, but they had no profit to show for it because they didn't hedge. They didn't expect the Mexican peso to perform so well.
Yeah.
Because at January, we thought the Mexican peso was going to fall apart completely. But now it's one of the strongest currency relatively against the dollar up till then. So a lot of people were off guard. We call it the major head fake in the currency market. So right now we're fine-tuning the economic model to see which way it's going to go. But our crystal ball is very cloudy because we got these elections coming up, and no one's talking about the November election that's coming up in the United States. And we expect that to really change especially the talk around the trade and everything else.
I think I would underline what Jacob just said when he said that of course instability hurts consumers in the end. As uncertainty in front of them, that will have a toll on investment, and that will have a toll on employment, and if of course things like currency are unstable, then we have the danger of that translating into the cost on the cost of products, and customers will end up paying for that, and that's exactly what we are. I was talking about it a little bit before, in the sense that we have been able for the past 20 over years to create a very competitive manufacturing consumer market. The first beneficiaries of this success story that we think has happened because of NAFTA have been the consumers in North America, because they have better products at better prices because of this very efficient manufacturing process that we have been able to build. If we start, creating all these factors that will create instability and uncertainty about it, that's what is going to happen. Our consumers, our people, our manufacturing base is going to suffer.
Yes,
people need their tequila. Let's be honest. That's the most important thing to take away from this conversation.
Lately, we need it a lot.
Exactly. Well, we were talking earlier, that tequila is interesting because it's not like manufacturing parts in the sense you can only get tequila from Mexico.
Yeah.
So if there's instability in the market, I mean,
really
what are the big what are the tequila companies going to do? Not stop selling tequila. So those costs inevitably will most likely have to be passed to the consumer.
Of course.
Yeah, we can't go elsewhere.
Now, we don't have the macro data at this point, but we do talk to a lot of businesses all over the United States who have a big presence in Mexico. And we could tell right away they are holding back on their investment because it's really hard for them to budget anything that's 6 months out or even 12 months out.
Of course.
Especially when it comes to machine tool industry. They sign the contract, but they don't produce and build and deliver maybe 6 months, 9 months later. The 9 months in the foreign exchange market is a lifetime.
And you're talking about currency.
Exactly.
Imagine if we consider this sunset clause that is being discussed in the NAFTA negotiations. That's been proposed seriously by one of the parts.
Is it 5 years they're thinking?
Yes, so they're proposing a 5-year clause that it means that every 5 years, all three countries terminate NAFTA and sit down and consider whether we renew it again. Imagine
That's
that.
going to be hard to do business.
Exactly.
So you're not going to build a plant, you're not going to
Right.
hire people. Exactly.
So if you're putting that on the table, that basically means you don't understand the way investment and
Who is putting that on the table?
Well,
America or
one of
or
the three
Mexico?
parts.
Or, yeah.
I'll tell you one thing.
I have a feeling it's
I will tell you one thing.
America.
It is not Mexico. It is not Mexico.
I had a feeling it wasn't Mexico.
It is not Mexico.
And Javier, going to the point about uncertainty, that creates exactly the uncertainty that affects all the business and trade flows and investment decisions that
Of course.
come.
So what we want and what we need is to keep of course, we need to review this agreement because, of course, it's a 20-something-year-old agreement. The world now is very different from what it was in the early 90s when we did this. There was no e-commerce then. The energy sector was not open.
You do believe that there needs to be a review?
Of course. Yeah, it needs to be reviewed. It needs to be updated. The thing is that Mexico and Canada, we thought that we had already done that because we had negotiated TPP. And we had negotiated TPP with the United States. TPP is basically a 21st century agreement
Right.
on what 21st century trade in the world should look like.
And for our audience, that would be a Trans-Pacific
The
Partnership.
Trans-Pacific Partnership.
Right.
And the U.S., Mexico, and Canada were part of the initial, from the beginning of the negotiation of the TPP. So that is, if you ask me, what does a 21st century trade agreement should look like? We have a very good answer. Look at that's TPP. Now, however, unfortunately, the United States is not part of that anymore. But that's what we had. So when TPP went out of the window, and then we realized then we do need to renegotiate NAFTA because we thought we already had done that. So what does a new renegotiated NAFTA looks like? It means that we need to update it. We need to consider sectors that were not included in that from the beginning. We need to look at things like e-commerce. We need to include the energy sector because the energy sector in Mexico was not open to investment, to a foreign investment in the early 90s. Now it is. So there's a lot of very different things in the world now that were not available then.
But as an economist, if I sit back and just take away any political consideration at all, if you look at current discussion about the trade and the tariff, no economic model can justify it. And in fact, if this thing does go through, if the NAFTA falls apart, the amount of hit that the various economies are going to take is so significant. From an economic perspective of doing cost-benefit analysis, it's really hard to justify it. So again, it's the political element that's coming in, and that's something that I cannot model in the economic models.
I mean, from our numbers, over 150,000 jobs in Georgia depend on NAFTA. I mean, exist right now in Georgia because of the exports that Georgia is sending to Mexico.
So in California, Texas, and those states.
In the case of those states, I mean, in the case of Texas, Mexico is the number buyer in the world, number one.
Right.
Yeah.
And in the case of California, number one in the world. So it would be a surprise to you that's why Governor Abbott sent a letter to the U.S. negotiators telling them, we need this. This is not something
Our model
that
tells
Texas
us
can live
that
without.
it's going to be about 0.5% hit on our GDP, and you're like, well, what's the big deal? Our GDP is about 20 trillion for this year.
Okay.
So we're looking at about $500 billion net loss in economic activities.
Well,
for the
Based
US.
on what?
For the benefit of
Just running the simulation,
Okay.
if we just get rid of NAFTA, what may be a potential impact on the U.S. economy,
Got it.
which is equivalent to the current trade cash flow between the Mexico and U.S.,
Okay.
which is about 500 billion.
And we're talking, according to some of our numbers, over 5 million jobs in the United States are going to exports to Mexico in the United States that exist because of this preferential access to the Canadian and the Mexican market. So we're not talking about a small thing.
So we're talking about the economic impacts of uncertainty, and in terms of the business decisions and currency fluctuations. I'm opening it up to the group. John, if you want to take the lead, it's just what specific hedging tools are available in these kinds of circumstances.
Before we talk about hedging, I think there's one thing that's really important. I think Jacob may chime in and help me out on this. A lot of folks who are doing business internationally, they don't realize that all the actions that take place in the market. And we just said the U.S. economy total is about $20 trillion a year. So within 4 to 5 days in the foreign exchange market, the amount of money that's being bought and sold is equivalent to the entire output of the U.S. economy. That being the case, every transaction that's done in the foreign exchange market, we call it technically OTC transactions, over the counter, which means all the prices are negotiated. So a lot of people don't realize that when you call 3 different banks, for the same amount of transaction, you're going to get 3 different pricing because everything is negotiated. In fact, if you called one bank and talk to 3 different traders, you're going to get 3 different pricing because it's just negotiated for every transaction. So our recommendation to our clients is that you always need to get a second opinion on the rate. And a lot of small to mid-sized businesses, they don't work with multiple banking relationships. In fact, they have one primary bank that provides credit facility. So they're at the mercy of whatever they quote on their pricing. So as a Tempus, we provide the secondary pricing as a reference point.
right.
That's number one. Number two, most of the businesses work with payment terms of 60, 90 days, whatever it might be. Whatever that is. In the old days, you didn't have to worry about that. Just run the business, get the invoice paid, and you run the business. Nowadays, within 3 months, let's say you invoice someone overseas, and you're waiting for payment in 90 days. Within 90 days, you could see a currency fluctuations up to 5 to 7%. That's the norm right now. well, 7%.
Can be a lot.
That's about 50% of your expected profit for most of the industries. So hedging, when we say, is simply just locking in the rate when you either generate the invoice or generate the purchase order number. So you don't have to be at the mercy of the foreign exchange market. And I think there's a bad connotation when it comes to hedging. We think about options and derivatives and synthetic financial instruments and things like that. What we're talking about hedging is simply getting an insurance policy. And there's a minimum cost involved with it. When it comes to forward contract, which is very simple, there's no premium. You simply lock in the rate, and now you don't have to worry about the foreign exchange rates.
Well, speaking of worrying or not worrying about foreign exchange rates, when I first started Goza, we weren't sending that much money to Mexico. So it didn't matter to me really what the exchange rate was, because it was what it was. And the difference in 5 to 7% didn't really matter that much because we weren't dealing with large numbers. But as we've grown, we expanded outside of our previous relationships into a relationship with Tempus. And the truth is I'm a big believer in let the people who know what they're doing, the experts, do what they do. I was never an expert in foreign exchange, so one of the advantages is, like you said, getting second opinions and people who can trade, because as you said, it is a negotiation for that extra percentage point is really, really important. And when you're talking about bigger and bigger number values, it does add up. The last thing, exchange rate. So it's been really important to have Tempus essentially worry about it for me, if that makes sense. I mean, like you said, you're the chief nerd economist.
Yes,
that's great. I think a company needs that if they're dealing with foreign exchange.
But I do need to give you a disclosure. If you ask me right now, point blank, where do you think the Mexican peso is going to be 12 months out? I really don't know.
Well, at least you're being honest.
No, not that being the case. If you tell
said
me,
you knew, I'd be like, this guy's a liar. I worked in Wall Street for a couple of years.
But if you had asked me right now, what's the weather forecast for Atlanta, maybe 3 days out, 5 days out, I can give you pretty good, reliable. I can tell you the rain or it's not going to rain. If I know that it's going to rain, because just based on European model, American model, whatever it might be, then I can suggest maybe you should take an umbrella. And that's your insurance policy.
Right.
So if you work with company specialists like us, we work with a lot of small businesses and let them know what the weather report is going to be for 7 days out, 14 days out. Up to 30 days, we are pretty good at it. I mean, we can pretty much tell you, make sure you take a jacket, umbrella.
Right.
Yeah,
Well, that's a good analogy. I mean, working with Patrick, he'll be honest and say, this is what I think it's going to be, which is important. I mean, like you said before, if you said you knew what was going on, I'd get scared. But there's been more fluctuation than ever. You said yourself, if you could just follow models, you'd be set. You know exactly, hey, this is where the peso should be trading, but that's not real life. Real life politics do matter, and especially coming up in July with the elections in Mexico, and you have NAFTA, and you have the midterm elections. No one really knows. So it's important to have people who focus on that full time.
And just to give you a context, right now $1 would get you about 19 pesos. If I take away any political element, just looking at the economic data, it should be about 16 peso. So extra 3 peso, which is about 18%.
It's a lot.
It's really driven by politics at this point.
Right, absolutely, and which can only get more volatile, I believe.
Yes,
I
in
don't
the coming
think
months.
there's no limit
Definitely.
to the volatility.
You can count on that
I think
this
we've
year.
learned, yeah.
There'll be more big storms coming through
It
in
can
the weather
still
report.
get more ridiculous.
So there are things you can count on.
Yes, it's going to be more volatility.
Well, is there there's got to be like a VIX for exchange foreign currency, right?
There is.
Going on in Mexico.
Yes.
And it has to do, of course, with speculation of what was going on in the United States.
Yes.
And of course, there was a frenzy about that time, and the currency and the Mexican currency had a sharp change in those months. Remember, now it's probably Americans are not so familiar with this concept because of the way the dollar behaves and how it behaves with other markets, but. In the case of Mexico, I can talk about Mexico and other countries, but in the case of Mexico, of course, the state of the currency is something that goes deeply into the national state mind. You know, the people's perception of the state of the economy of the country is very often connected to how the peso is connected in terms of its value towards the dollar. So that means, of course, that about a year ago. This was reflecting not only, of course, global demand of currency demand, but it was also reflecting the people in Mexico's
The psychology. I guess?
psychology, exactly. Now, I was reading hearing a few weeks ago an analysis of people who were talking about how during the last year, there was basically a lot of people who invested in dollars.
Yeah.
So they started buying dollars as a way of protecting themselves towards uncertainty. Against people who, let's say, used their money to buy government bonds or to buy property, in order to do different things with their money to protect their capital, basically. And it turns out that most people who did the strategy of buying U.S. dollars, they lost.
Yes, that loss. One of the main reasons is Bank of Mexico did a fantastic job of raising the interest rate and taming the inflation.
Which means basically that I think personally that saying that anything can happen, I would not agree with that. Because the Mexican peso has had a tendency, and the Mexican Central Bank, the Banco de Mexico, has behaved as one of the most stabilizing, central banks in the world, and it gives certainty.
And that was one of the reasons why the peso has strengthened 2017, which is about 14%, which surprised a lot of people. And I think those people who invested in dollars, they lost.
About a year ago in Mexico, people were ready to jump out of ready to jump out of the windows of their buildings because the peso was devaluated.
And if you take a step back, I'm the first one to say Mexico actually grew last year, about 2.1%. And according to the forecast from IMF, World Bank, despite all this political noise, it will grow about 2.2, 2.3. Inflation is coming down. That's why I say fundamentally, Mexican peso should be stronger. But we are not there yet because
we're not
of all
fundamental.
It should be strong.
It should be. Well, it brings us to the point, what does the future hold
Exactly.
for these two
If
countries?
you ask me, what the future hold? Yes, we have some political events coming up this year. So what will that bring? I think that will bring whatever happens in the elections in Mexico and the United States and NAFTA and all that. That will bring temporary speculation.
Yes.
That's inevitable.
I agree with that.
That will happen. But the long term, if you look at the things on the long term, we're
What's
not
that, 5 years,
we're
10
not,
years?
Yeah, we're not.
Yeah, I
going
agree.
anywhere.
I think Goza's relationship with Mexico and the tequila business in general's relationship with Mexico is as strong as ever. The Consejo Regulador del Tequila, a huge presence in Mexico, is as strong as ever. The demand for tequila, for sure, is as strong as ever. I do believe that storms will be weathered.
Now that being the case, if we got into a time machine and we're having this conversation about 3-4 years ago, Mexican peso was about 12 and 13.
Right.
And
when I started the
and
company,
when we're having the conversation and say
Right.
we're going to see 22, I think someone would have said, "Are you crazy?"
Yeah, no. When I started the company, it was about 12 or 13. I was like,
Right.
"This is great. We're at 13."
And now we're 12, 19,
Exactly.
20.
And now I'm down to 18. And I'm like, no. Why? So you don't know, but I think beyond the exchange rate, I think there's more to talk about just the actual relationship between the countries.
And speaking of that relationship, I think Javier, Nadia Theodore, the Consul General for Canada, was here last time, and she was talking about that the EU market treats itself as a bloc, trading with the rest of the world.
Correct.
And the thing is that the U.S., NAFTA, and North America, being Canada and being Mexico and the U.S., I don't know that Americans, at least in this political environment, appreciate that we are a bloc that really is a valuable tool to be used. I don't know what your perception is, how that could be articulated, or what your thoughts are from the Mexican side.
You won't be surprised that I agree with Nadia. Of course, that's totally true. We do not see ourselves or perceive ourselves as part of a bloc. And I must say that includes Mexicans and Canadians. We as a region, people in our countries don't perceive themselves as North Americans. We are Canadians, we're Americans, we're Mexicans. We're not North Americans in our psyche.
Not the same way Europeans are.
There's no such a thing as a North American flag. There is a European flag.
Yeah.
Not a bad
There's
idea.
no such a thing as, of course, as a common currency. We have never talked about it, and we are not planning to do that. No, we don't see ourselves as a common market. We never did. We never talked about that from the beginning. So all we want is to have free trade and free trade. I think the word free trade sometimes creates a misnomer in the sense that it doesn't paint the whole picture. Because yes, we have a free trade region but mostly we are a manufacturing powerhouse. And that's what we really are.
And my point being is that there should be a benefit to understand. You should huddle up and say, as a bloc, we can do things together with the rest of the world that will make us more competitive.
We are a regional manufacturing powerhouse that is the most efficient and probably most efficient manufacturing region in the world. We don't think of each other.
And
as
that
way.
conversation is changing towards that direction, because I was at a lunch conference with a whole bunch of nerdy economists, as you said. And the latest consensus is that the world is evolving into G2. It's between U.S. and China. And in order to effectively compete against Chinese manufacturing powerhouse, we do need a more efficient platform on our end. So it's going to be EU, China, U.S. competing as a bloc. U.S. alone won't be able to compete against China
And that's
when it comes to
what-
manufacturing.
That's what we
Yeah.
thought TPP was about.
Good point.
A lot of
Very
people
good point.
did.
Yeah.
Well, everyone, this has been a fabulous discussion. I just want to say thank you so much for a lively discussion, a really informative discussion. Thank you for some really great insights. Consul General, thank you so much for being here. And of course, Mr. Goza.
Thank you.
Our-
Pleasure to be here.
Yes, I'm just joking. And then John, thank you
Thank
very
I
much.
am Mr. Goza.
Yeah.
Yes,
Thank you.
it was great.
No joke.
Thank you.
Thank you.
That's it? Oh, that was so
That
much
was
fun.
fast.
Yeah.
I thought